In this video, you'll see how banks often treat people across 6 levels of wealth, from basically zero all the way toward $1 million. We'll call it the visibility ladder. Because banking isn't only about storing money, it's about how visible you are inside their system. At the bottom, you're a risk profile. In the middle, you're a product target. Near the top, you're a relationship. Same building, same logo, completely different experience. One more thing before the levels: banks are not charities, and they're not cartoon villains either. They're businesses sorting customers by risk, cost to serve, and potential profit. That sorting shows up as fees, wait times, product offers, rate conversations, and whether a human ever learns your name. You don't need every bank's internal playbook. You only need the pattern. Let's start at the floor. Level 1, invisible. Dollar trigger. Your checking balance is near zero or already under. This is where the system feels coldest. A transfer fails. A card declines. A fee appears overnight, often around $35 for an overdraft. And the notification sounds almost polite. You call support, you wait, hold music, robot menu, another robot menu. Then a person who sounds like they're reading from a script built for volume, not for you. Ask for a fee reversal. And you may hear the same sentence 1,000 other people heard that day. I can submit a request. No promises. Nobody is trying to know you here. They're trying to contain risk. From the bank side, that can make sense. Small or negative balances are expensive to manage and more likely to bounce. Fraud checks get stricter. Holds last longer. Manual help is scarce because every minute of human time costs money. From your side, it feels personal. It isn't. It's ranking. Tiny human detail. You refresh your app 3 times in a parking lot, hoping the pending charge clears before rent hits. Insight. At level 1, the bank doesn't hate you. It barely sees you. At the next level, you're no longer invisible, but you're still not important. Level 2, tolerated. Dollar trigger, a few $100s sitting in checking. Enough to avoid constant declines, not enough to matter. Now the basics work. Purchases go through, paychecks land, the app feels normal. But notice what doesn't happen. No one calls, no one remembers your name. No one upgrades your experience. You're processed. Customer service is still slow. Branch visits feel like taking a number. Your relationship is mostly passwords, fraud alerts, and monthly statements you ignore. If something goes wrong, a double charge, a locked card, a weird pending payment, you still enter through the same digital front door as everyone else. Chatbot first. Form second, human last. Banks can still make money at this level through interchange fees, account fees, or cross-selling. But you are not a priority seat. You're a standard account in a giant queue, tiny human detail. You stand in a branch line for 20 minutes for a simple account question, then leave with a pamphlet. Insight, level 2 is survival mode for the customer and automation mode for the bank. At the next level, something changes, not because you became more likable, because your cash became useful. Level 3, noticed. Dollar trigger, roughly $5,000 to $10,000 in deposits, often an emergency fund sitting in cash. Suddenly the bank wakes up a little, you start getting offers. High yield savings pitches, credit card mailers. Upgrade your account banners inside the app. You're not wealthy, you're fundable. That emergency fund makes you safer as a borrower and more interesting as a depositor. Your money can sit in their system while they lend and earn a spread. Even a few $1,000s is inventory they can use. So treatment softens, not into luxury, but into marketing. Someone at the counter might actually smile. A chat agent answers faster. The bank starts speaking to you like a future product buyer. Cards, loans, relationship packages, investment referrals. Watch the language carefully. It's warmer, but still transactional. They're not celebrating your discipline. They're responding to a balance that crossed an internal threshold. Tiny human detail. You open the app for a balance check and get 3 new product suggestions before you see your own number. Insight. At level 3, visibility begins, but it's visibility as a target, not as a partner. At the next level, the soft sell turns into special treatment. Level 4, valued, dollar trigger, around $25,000 to $50,000 across deposits, sometimes including short-term cash you've parked after a bonus, tax refund, or house down payment save. This is where many banks start acting like they know you. Monthly fees disappear. A named banker shows up in your messages. Holds get shorter. Exceptions that were policy yesterday become, we can make this work. Need a document verified? Someone helps. Need a larger transfer reviewed? It moves faster. Ask about a better savings rate and you may finally get a real conversation instead of a help center link. You're still not private banking, but you've crossed into the zone where keeping you is cheaper than losing you, because deposits at this size are useful inventory for the bank. Your loyalty has a dollar weight. If you leave, they lose more than a low balance account. They lose stable cash and future product opportunities. Tiny human detail. The branch manager greets you by first name before you say why you're there. And somehow, that feels bigger than it should. Insight. Level 4 is the first time the bank's politeness feels earned by your balance, not your personality. At the next level, speed becomes a privilege. Level 5, preferred, dollar trigger, roughly $100,000 to $250,000 in liquid or investable balances, cash, brokerage cash, or a mix that puts you on a higher internal tier. Now the experience changes shape. You get priority phone lines, faster underwriting conversations, better rate discussions on loans and credit, invitations to wealth check-ins that sound helpful, and also carefully designed to gather more of your assets. This isn't magic, it's segmentation. Banks and wealth platforms often sort households into tiers. Higher tiers get better service economics because one strong relationship can hold more products. Checking, cards, investments, lending, insurance referrals. That's why the tone shifts from how can I help to let's review your full picture. Your time gets protected because your total relationship value rose. You may also notice quieter privileges, fewer surprise holds, quicker dispute handling, and staff who seem authorized to solve problems without transferring you 5 times. Tiny human detail. You call about a wire and a human picks up in under a minute. You almost don't know what to do with the silence that used to be hold music. Insight. At level 5, convenience stops being customer service. It becomes a retention product. At the next level, you don't chase the bank. The bank organizes around you. Level 6, protected. Dollar trigger. Around $500,000 toward $1 million and beyond in household financial assets connected to the institution, or enough that losing you would hurt. This is relationship banking in the real sense. A dedicated contact, proactive outreach before you ask, meetings that feel planned around your life, not around their queue, products packaged as fit for your situation, even when the underlying math is still the bank protecting its own risk and profit. Need something unusual? There's a person whose job includes knowing your file. Traveling, fraud monitoring may get a heads up instead of locking your card mid-dinner. Considering a move of assets, expect a retention conversation with real options, not a generic, we're sorry to see you go. You're no longer waiting in the same hallway as level 1. You're in a quieter room. Important honesty check. This doesn't mean you're invincible. Wealthy clients still get told no, markets still move, credit still has rules, complex products can still be expensive. But the default posture shifts from prove you belong to help us keep you. Tiny human detail, someone sends a calendar invite titled quarterly review, and it doesn't feel like spam. It feels like the system finally made space for you. Insight. Level 6 isn't kindness, it's alignment. Your size finally matches their incentives. Now, a fair pushback. Maybe your bank has been kind at a low balance, or rude even when you had money. Individual people can break the pattern. Local branches can feel different. Credit unions and online banks can score differently too. The visibility ladder is not a promise that every institution behaves identically at every dollar amount. It's a pattern map. As your economic value and risk profile change, service quality often changes with them. Use it as a lens, not as a universal law. Remember the self-checkout? $4.80 declined. That silence behind you. That moment wasn't random cruelty, it was level 1 logic. Same bank that later might waive your fees, assign you a banker, or call you back in under a minute. Once your number on their screen looks different. The visibility ladder is not a morality story, it's a map of incentives. Banks manage risk. Banks chase profitable relationships. Your experience often changes when your balance changes. Not when your personality does. That can feel unfair. It can also be useful information because once you understand the ladder, you stop taking every cold interaction personally and you start asking better questions. What level am I actually on? Where is my cash parked right now? And if I want a different experience someday, is the next move more balance? Or a better structure for the money I already have? You don't need to become a millionaire overnight to use this map. You only need to stop confusing customer service with character judgment. The bank is running a system. Now you can see the levels inside it. If this map helped you see the system more clearly, subscribe to Danny Wolfe Finance. We break down money systems the way they actually work, not the way brochure copy pretends they work. And tell me in the comments, which level are you on right now? Invisible, tolerated, noticed, valued, preferred, or protected? No judgment, just the map.